Welcome to Dynametrics Financial Update for March of 2026. I am Tillie Allison, founder of Dynametrics Financial, and so happy to have you here. Just love sharing my experiences in the market. I've been in the industry since the dot-com bubble, and with that, over 2 decades of actively managing money in the markets. And at Dynametrics Financial, we believe that active money management, being able to protect gains, because right now what we're seeing in the overall markets is the stock markets have been declining, just how much pressure and that 10% loss that happens so very quickly, how that can impact our overall balance sheets. So as we look here at what's happening in 2026, our first quarter, well, we sure have had a lot of changes. So we know here that at the end of the year, the U.S. stock markets were up over 20%. And boy, have things just changed so much. What we've seen here across the board is that the stock market itself has dropped about 10% across the board. And as we look at the news impacting the market and why it's dropped over 10% here very, very recently, and as we take a look at the most recent headlines and what's happening, as we go here and we look at the Federal Reserve, the expectations that the Federal Reserve would possibly cut rates, but they have not. And that causes additional stress on the markets if their expectations are to have interest rates cut, but they do not. And so with that, we've also seen tremendous sell-off in the Magnificent Seven, that they've lost 850 billions of dollars in that particular group, in that particular sector. So how does that directly impact our balance sheets? Well, it depends on how much investments that we have are allocated into the stock market, specifically the tech sector. So with that, the Mag 7, the last quarter here, has dropped significantly, dragging the overall markets down. And again, just depending on what our allocation is, if we're long the market, we saw markets peak at the end of the year up over 25%. Many investors don't realize that money managers typically only take gains based off of our age or based off of the calendar year, not relative to market volatility. So we're looking at stocks like Microsoft ending the week down over 6.5%, NVIDIA, Amazon, 3%, Tesla, 2% here recently, just in the last week, that we had a rebound in some of the semiconductor group here. But overall, it's about a 10% drop this quarter so far as we're moving into the next quarter for 2026. So the big tech companies out there, NVIDIA, Meta, Google, these big companies you can see are down. And on the average, we're down about 10%. This was just in the last 5 days. So depending on how many holdings we have that are in the tech sector will directly impact our balance sheets and our gains or our losses for the particular quarter. So as we look at that allocation and what that looks like, these comparison charts can be very helpful. Comparison charts give us an idea of market strength relative to one another. So in this particular comparison chart analysis, the NASDAQ group is here in the red. And with that being a market that has declined most recently, over 10% since the end of the year, 2025 going into 2026, there was a peak in the NASDAQ in October, at the end of October of 2025. And then into the first quarter, it started to make what we call lower highs, which represents that the institutions are selling out of that particular sector and buying into other sectors like gold, because we've seen that gold has had a tremendous rally at that time. So that tactical allocation into other markets like gold or crude oil, when institutions are selling products like NASDAQ. The S&P 500 is represented here, and the S&P 500 as well did also peak in October and in November. And then again, though, the S&P 500 actually peaked in January, making a relatively same high, just a bit of a higher high going into the new year. But unfortunately, with all of the controversy and catalyst happening, the markets have declined over 10% here now as of March 2026. So tactical asset allocation is actually selling periodically after markets rally, having cash available to be able to buy back in when markets decline. So this market volatility that impacts us, and having allocation into other markets like crude oil and gold and tactically managing those as well can make a big difference. So as we look at the different catalysts and the different news impacting our balance sheets, we at Dynametrics Financial realize that the news impacting us as investors, that when institutions sell, that it's very important to realize we never know when they're going to sell. So protecting gains and expecting that periodically the markets are going to fall, regardless of what the catalyst will be. And all these catalysts impact us. So knowing that that's going to happen, it is said that when markets are rising, we need to anticipate that there will soon be some news or some catalyst for the big institutions to begin to sell. So that tactical allocation is going to factor in all of this. So regardless of what's happening, on our earnings calendar here coming up, if we have a lot of earnings and they miss expectations, then that certainly can impact that particular stock's pricing. And with that, it can impact the entire sector. So coming up here for the next last week of March, we've got a number of companies reporting. Here on Tuesday, we've got 128 companies reporting. And most of the big names have already reported. They'll always be in the headlines, but we want to factor in that earnings, interest rate changes, anything that will be a catalyst is what we call priced in. So tactical allocation is factoring in all these news events that we know will impact the market and having a plan in advance to protect those gains. So at Dynametrics Financial, tactical allocation helps us to protect those gains. That way, whenever we take distributions, we're taking distributions from capital gains. Right now, if someone is taking a distribution this quarter out of their stock allocation, we realize that taking a distribution from the stock allocation at this time, we're now taking a distribution and we're taking it when markets are down. And it would be a better strategy to be able to take distributions when we have gains, locking in those gains for that distribution. So I'd love to share more with you about tactical allocation. Go to dynametricsfinancial.com, get started. Let me know your goals, how you feel about things, and I'd be happy to share with you our strategies, how we can protect and grow wealth. And I'm so looking forward to hearing from you. I hope that you have a great day, rest of your day, and look forward to hearing from you.